Good afternoon. Welcome to the Monetary Policy Stance Press Briefing. Let us welcome the following: Monetary Board Chairman and Bangko Sentral ng Pilipinas Governor, Governor Eli M. Remolona Jr., Senior Assistant Governor Iluminada T. Sicat of the Monetary Policy Subsector, and Officer in Charge Dennis D. Lapid of the Department of Economic Research. Senior Assistant Governor Sicat and OIC Lapid will handle our Q&A later. Governor Remolona will now deliver the statement on the monetary policy decision. Governor?
Good afternoon. After its meeting on monetary policy today, the Monetary Board decided to keep the BSP's target reverse repurchase rate unchanged at 6.5%. Accordingly, the interest rates on the overnight deposit and lending facilities will remain at 6% and 7% respectively. The balance of risks to the inflation outlook still leans significantly toward the upside. Key upside risks are associated with potential pressures emanating from higher transport charges, increased electricity rates, and higher oil prices. Meanwhile, the impact of a relatively weak global recovery, as well as government measures to mitigate the effects of El Niño weather conditions, could reduce the Sentral forecast. At the same time, the country's medium-term growth prospects remain firm, with strong demand expected in the fourth quarter due to sustained consumer spending and improved labor market conditions. The BSP will also continue to monitor how firms and households are responding to tighter monetary policy alongside evolving domestic and external economic conditions. The overall outlook for inflation remains largely unchanged. The latest risk-adjusted inflation forecast for 2024 has declined to 4.2% from 4.4% in the previous meeting in November. For 2025, the risk-adjusted inflation forecast is unchanged at 3.4%. Equally important, the BSP's latest survey of external forecasters shows that inflation expectations have been broadly anchored, with mean forecast that's within range for both 2024 and 2025. With all the recent information, the Monetary Board continues to see the need to keep monetary policy settings sufficiently tight to allow inflation expectations to settle more firmly within the target range. The Monetary Board also noted that previous adjustments have continued to work their way through the economy, as can be seen from the declining path for core inflation. In the coming quarters, the national government's non-monetary interventions will remain crucial to sustain the disinflation process. Going forward, the BSP remains ready to adjust monetary policy settings as necessary in line with its mandate to ensure price stability. Thank you.
Thank you, Governor. At this point, we would like to request Senior Assistant Governor Sicat to elaborate on the BSP's inflation forecast for 2023, 2024, and 2025.
The latest baseline inflation path is broadly unchanged relative to the previous forecast round. Inflation is seen to settle The latest baseline inflation path is broadly unchanged relative to the previous forecast round. Inflation is seen to settle at average rates of 6% for 2023, 3.7% for 2024, and 3.2% for 2025. As the governor stated earlier, the risks to the inflation outlook continue to be significantly skewed to the upside for 2024 to 2025, Should the risk materialize at their assigned probability, the risk-adjusted inflation forecast could settle at 4.2% in 2024 and 3.4% in 2025. And the governor mentioned the factors that will contribute or the factors that would contribute to the upside risks.
Thank you, Senior Assistant Governor Sikat. We now proceed to questions from our media friends. This will be our order of questions. First, we will have in-person attendees from the BSP Press Corps, questions from them, and then questions sent in advance, if any, and then online questions. We will begin with the reporters who are here today. Reminder to please raise your hand and wait for the microphone to be handed to you. When you have a question, kindly state your name and identify your media organization before asking your question.
Good afternoon, Jerome Morales from Reuters. There were mentions of the risk-adjusted inflation forecast for 2024 and 2025. Maybe ask about 2023. It was previously at 6.1. Any changes to that?
The risk-adjusted inflation number for 2023 remain at 6%.
Is that baseline or risk-adjusted? That's baseline.
Risk-adjusted,
Risk-adjusted.
6%. Early on, it was 6.1 last November, and it improved slightly to 6% for 2023.
Thank you, ma'am.
Any other questions?
Part of the reason for that is some of the risks that we were previously reckoning in the last meetings have been already included in the baseline, such as the strong El Nino. So some of those some of that potential upside risk have been made part of the baseline already.
Thank you, Sagdu, and also Sir Dennis. Yes, we have another question.
Good afternoon, Victor from GMA. Just wanted to ask how big of a factor, if any, is the expected drought in the provinces as a factor for 2024? Thank you.
In our risk-adjusted inflation forecast, actually, we incorporated the impact of El Nino, and we added additional potential pressure for Q1, which our forecast is that there will be stronger El Nino, and therefore we incorporate that as well in our forecast for 2023. And but for quarter 2 2024, we continue to adopt a outlook that El Nino impact would be moderate. For that, our estimate on the strong El Nino weather condition would be 0.02.
Thank you po. Thank you, Saglu. And any other question, please? So, what about online? Do we have any questions online? Okay. We have one question from. Yes.
Hi, I'm Drea from Bloomberg. Ma'am, sir, were there any discussions during the monetary policy meeting on how the Fed's signal this morning about considering rate cuts in 2024? Did we have also same discussions if we're considering similar rate cuts for 2024?
We consider the Fed action as part of our baseline forecast, and based on our latest estimate, actually for 2023, we are estimating a decline in the inflation forecast coming from Fed rates fund rate, and impact of that is 0.01 for 2023. For 2024, we're expecting lower impact on inflation by 0.4, and by 2025 by 0.5.
Follow up, ma'am. On the inflation path, entering to from December and then entering into 2024, can you give us a picture? So, will it return? Is it expected to return to target this month, and then
Which one?
inflation?
Inflation.
Headline inflation. Yes, sir. Yes, ma'am.
You mean the monthly?
Yes, monthly.
Path. We're expecting improvement, return to target path by Q1 2024, but we'll see some uptick in the second quarter. Okay, inflation is likely to settle within the target in Q1 2024, mainly due to the negative base effects, but could temporarily accelerate above the target from April to July due to the impact of El Niño weather conditions. Also, the lag impact of minimum wage adjustments in 2023, as well as the positive base effects. Subsequently, inflation is projected to return to target in Q3 2024 and settle near the midpoint of the target in Q4 2024, owing to the decline in world oil prices.
Thank you, Sagdu. Any other questions, please?
Good afternoon. This is Keisha from Business World. How about the water rate hikes that was just recently announced? How will this impact inflation in 2024? Thank you.
We included an add-on to incorporate the recent water rate hike, but that's only has a minor effect on the path.
Thank you, Sir Dennis. We have 2 more questions.
Good afternoon, ma'am. Ma'am Karen from Reuters. Ma'am, given the, Sir Dennis, Ma'am Lou, given the improving inflation outlook, and you just said that you expect the inflation return to target in the first quarter of 2024. So does that mean the central bank can say that it's nearing or it's ending its tightening cycle?
As the governor has repeated many times, we need some firmer indications that inflation expectations are already anchored firmly within the target range, and actual inflation has reverted back within the target path. So we must see that there are firm indications towards that trend.
Sorry, in the statement, we also made clear that the risks that we're seeing are still very much weighted towards the upside. And as the governor mentioned, if you look at the risk-adjusted forecast, you'll see that there is a risk that inflation could still end up above target for this year. So I think that's inflation control is still very much the focus for the monetary policy decision making.
Thank you, Sagdu. Thank you, Sir Dennis. Any other questions, please?
Good afternoon po, Dicas Lopez from Bloomberg. If you're to make a recommendation to the Monetary Board, how long should inflation be within target before they can start cutting rates?
how long? We need to have more.
Yes, idea.
We need to evaluate based on recent indicators. We need to evaluate what the inflation outlook would be and impact on growth and all other indicators that will contribute to inflationary pressures, including external developments. So for now, it's very difficult to say when it would be as external and domestic developments evolve. But we continue to closely monitor what's happening within the domestic economy as well as what's happening externally, which could spill over and affect inflation path.
The key metric will still be the inflation forecast, so going 2 years out, and also just as important will be the assessment of where the risks are, whether it's on the upside and the downside. So currently still on the downside, so that's
On the
on the upside. So as the statement makes clear, the monetary board is still prepared to undertake additional action if necessary.
And another question on the peso, given the recent appreciation of the local currency against the US dollar, would you say that the exchange rate is no longer a problem as far as inflation is concerned? Thank you.
Actually, exchange rate is basically affected by market sentiment. Sometimes there's no fundamental reason, but market reacts to development both internally and externally. As of now, it's difficult to say where exchange rate would be, but as a policy of the BSV, we continue to espouse a market-determined exchange rate. And there is no expected action from the BSP for as long as the movement of the peso will not affect inflation outlook.
Thank you, Sagdu. Maybe we can ask for the last question. Okay.
Do you have latest data on inflation expectations? I understand in November it settled, I think, near or above the target. But do you have any latest data or more recent data on that?
We regularly conduct survey of market expectation. Right now, we have inflation expectations from 25 external forecasters, and result of that, based on BSP's survey conducted last December 5 to 10, it showed that there is lower mean inflation forecast for 2023 at 6%, which is lower than the 6.1% in November. And for 2024, inflation expectation also declined to 3.9 from 4%. And for 2025, there was a slight increase from 3.4% to 3.5%. We also look at the business and consumer expectation, but we will have another press briefing for that tomorrow. Right?
Yes.
So results of the BES, latest BES and CES are also incorporated in the considerations of the Monetary Board on the monetary policy stance.
Thank you, Sagdu. Last call for questions. If there are no more questions, we will go briefly to this question from our FB page from Shaira Veronica. Similar to questions earlier asked by reporters, what is the BSP's thresholds for the cut next year?
It depends on what numbers will be out, in terms of our inflation out. As I said earlier, and what Dennis emphasized earlier, It depends on result of our assessment of inflation outlook. And this will be evaluated on the risk numbers, whether they are up or down. Until then, we need to gather more information and make sure that the indicators are emitting consistent signal.
I think the overall approach is on a meeting by meeting basis. We look at the data at each meeting, and we look at the outlook first and foremost.
Thank you, Saglu, and thank you, Sir Dennis. We would like to thank everyone for their time and attention this afternoon and for joining us live on our FB page. This ends our Monetary Policy Stance press briefing. Maraming salamat po.